banking sector, the regional banks that we saw go under, that was just the start. To me, that was a tremor before something bigger. And this is my fear, is that it turns into a recession that lasts a long time.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
We saw the CPI and PPI numbers declining just a little bit, which is what the market wanted to see. I think the one thing that stood out to me is that if you stripped out the core from the CPI, the number didn't really fall much. In fact, it upticked very, very slightly. So again, the PPI number was a very good number. It told us that on the producer side, inflation is dropping. The CPI number, if you took out food and energy, it was not dropping quite as much. So right now, the market's liking this. We're seeing a good risk-on environment. But I want to see what happens as we get into earnings season and what happens if we look at a recession like the Fed has now said we will get in the second half of the year. So I think the key is, when you're getting inflation to come down from 9% or so, the initial move down will be very quick because, again, that was really inflated due to supply chain issues and other things like that. The trouble is always the last little bit. And I always liken this to, people can get in shape or I can get in shape, but how much more do I have to do to just get that six-pack, right? It's that last little bit that's the hardest to achieve. And I think for me, that's looking at the market and the economy and saying, okay, inflation should come back to 3%, give or take, but can the Fed get it to 2%? Can they get it to below 2%? And I'm skeptical on that. I think it could take years for us to get below 2% again. And that's going to put handcuffs on the Fed in terms of if we do hit this light recession they're predicting now, how do they get us out of that? Or does it turn in? And this is my fear, is that it turns into a recession that lasts a long time. We find ourselves in this light recession, but one that lasts for potentially a year or two.
What other factors the Fed may be looking at as it makes its next move coming up? What else are you seeing there?
Yeah, so I think the Fed is probably on point to raise 25 basis points more. I think they're being a little bit more careful now because of the banking crisis. Even though we've seen that the banking crisis seems to have subsided, one of the concerns I have is looking at the regional bank ETF, the KRE, and the KRE still is showing us that we're not really out of this crisis. We're not bouncing back and getting back some of the losses that we had on that chart. And so you have to be, as an investor, someone who's very concerned here that maybe things could escalate again at some point. And I think one thing to pay attention to is Jamie Dimon recently did say that it's not over and that there are still possible hiccups in the banking system to come. And the market, again, is in this groove of ignoring a lot of these things. They ignored the Fed saying we were going to have a slight recession. They're ignoring Jamie Dimon saying this. Warren Buffett was on CNBC recently, and he said that one of his retail companies, their sales year over year were down 22%. Market ignored it. Wasn't even a headline. So there are these things that are going on right now that, to me, have me becoming more and more conservative and more bearish. While the overall market seems to be ignoring this and it's risk on. I think the Fed, again, and this is the tricky thing, is that the Fed said a mild recession. They also said inflation was going to be transitory, and we know what happened there. So I think the Fed has a huge credibility problem. I certainly don't put a lot of credence into what they say it's going to be. I mean, if they're telling us it's going to be a mild recession, I would generally price into my investments a mid-level recession, right? And so I think investors have to be aware of that. Do you trust the Fed? I mean, if the Fed's telling you this, do you think it's going to be that, or is it going to be worse than what they say? So for me, it's saying, okay, a recession's coming. The question to me is, how do we get out of a recession? The past 15 years, the Fed has bailed us out because inflation's been below 2%. What now happens if inflation's at 3% or 3.5%? Can they bail us out without causing a massive spike in inflation again, like we saw in the 80s? So this is now entering, to me, a phase of the stock market of investments where investors now have to be very careful. Historically, when the Fed actually even cuts rates, that's been a period where the stock market actually declines, even though right now it seems like investors would be thrilled if the Fed started to make money cheaper. The reason why historically the markets have declined is because if the Fed's cutting, something in the economy is really broken and they're feeling forced to cut. And that, again, would be a situation where I would be very nervous if we get to that point.
If you think that this is maybe just the beginning, or if we really are through it, like some people seem to be thinking.
Yeah, so I'm not sure about the banking sector itself, if we'll have some major issues, that continue. But the one thing I do know is that when you have inflation, when you have interest rates that are at 0.25 basis points and you raise them to 5% in a very short period of time, you're going to break things in the system. The banking sector, the regional banks that we saw go under, that was just the start. To me, that was a tremor before something bigger. So I highly doubt that when they jack rates up this much, that's the only issue we have, and that somehow we're going to avoid any sort of major recession or major breakages in the economy. I'm more in the camp that this is probably a precursor to some other big things that are coming down the pike. That's the beautiful thing about it, is I'm a more short-term trader, meaning I day trade, I swing trade. Swing trading is holding for days or weeks or even a couple months. And so when you get added volatility like this in the stock market, in asset prices, there usually is fear-driven selling, which is an overreaction, and then fear or greed-driven buying, which is an overreaction. And so there's counter-trend plays to that. So it actually has been an amazing trading environment in the stock market, even in crypto. But again, it's not for the faint of heart. You have to kind of be willing to step up when everyone else is panicking.
Are the charts telling you that something is different for gold this time?
Yeah, so to me, this is definitely the real deal, right? And part of it is going historically back to the 1970s. I think we've talked about that before, how the pattern that we saw from 2018 to 2020, from 2020 to 2022, and now this starting up move is totally almost a replica of what happened in the 1970s, where gold actually, after that consolidation period, started to do a 9x return. It went from about $100 to about $900 an ounce. Now, again, I don't think that we'll do a 9x here on gold at these levels, but at the same time, to me, this is the replication of human sentiment and what's going to come forward. So I do think that per the charts, and I've been bullish on gold for the last couple years, is that we should break the all-time highs at around 2075. And I think by year end, you're looking at 2,300 at minimum. And I think really 5,000 within a year or two is very, very possible. This should be the new bull market here in asset prices, if you will. And I think it's long overdue. And we should see, I continue to be very, very bullish on gold.
We have seen Bitcoin moving as well. Curious to know what you think about what's going on there. Is this sustainable? What might we see next?
Yeah, so we are at an epic level on Bitcoin, all right? And what I mean by that is that in terms of psychology of the market, this level is the top level to watch, meaning that if we can break it, that's very bullish that the lows are officially in on Bitcoin at 15,700. If we can't, then to me, there's still an opening for Bitcoin to go down to 12 to 13,000 level and maybe even below that. And the reason I bring up this level at 30,500 specifically is if we take a trend line and we go back to the lows starting in 2021 before the big pop, then the retrace came right back in there where we hammered on it for a long period of time. We then had the run to 69,000 and we came back in and consolidated right along that line. So psychologically, when we broke this, that was very bearish for crypto. If we could get above it and stay above it, then that's very bullish for crypto. So again, right now we have made a full round trip from this breakdown here all the way back to that level, but we're still hammering on that level. And again, the level's approximately 30,500. So for me, this is an epic level to watch. I want to see, can it get above? Can it stay above if it gets above? If it does, I think that bodes very well that the crypto markets have bottomed out for this bear market cycle.